Last night, Treasurer Jim Chalmers handed down Labor's third budget, and being a pre-election budget, it was somewhat generous despite the persisting inflation. A lot of the measures were aimed to help alleviate some of the cost of living pressures. Today, I'm going to go through those bits of the budget which I think as a financial planner may be important to your financial plan moving forward. But just remember, a lot of this needs to go through Parliament before it's actually legislated. Firstly, one of the big ticket items is the Stage 3 tax cuts, which are coming into effect from 1 July 2024. Now, this is no surprise. It's actually already been legislated and I've done a video on it about 3 months ago, but let's just give you a quick refresher. This table compares the current marginal tax rates with the new tax rates in the 2024-25 financial year. The saving you get is going to depend on how much you earn, with the maximum saving being $4,529 if you have taxable income of $190,000. There's always been a rather alarming statistic that women's superannuation balances are less than men. And part of this is due to the fact that women take off more time to start a family, which in turn negatively impacts their super balance. To help close this gap, the government has announced that they are going to be giving 12% superannuation guarantee contributions on the paid parental leave. So the paid parental leave is the leave that you get, or the government provided leave that you get when you're an eligible person and you start a family. Now, naturally, I think this is a great thing. Every household that pays an electricity bill is going to get a $300 credit into their account as part of the energy bill relief. Now, this credit will automatically apply to your electricity account in quarterly installments. If you're living in WA, like me, then the state government also promised a $400 credit towards electricity. So we get to double dip and have $700 in credits. It's anticipated as well that the Queensland government is going to give another 1,000 in power credits. There is also an energy bill relief of $325 for eligible small businesses. Again, this is going to automatically apply to the electricity account and it's going to be rolled out in quarterly installments. I do like to see the support for small businesses because a lot of them out there are doing it tough at the moment. This is one for those who are receiving government pensions or cards, most notably aged pensioners, because the deeming rates are going to be frozen for another 12 months. For those of you who might not know, the deeming rates are the assumed return on assets and they count towards the income test. So the lower the deeming rate, the lower the assumed return, and it may mean that you get a higher pension, or it also might help eligibility towards things like the Commonwealth Seniors Healthcare Card. Again, I think this is another good measure. Those people who are receiving support from the government in terms of pensions and things like that, they're probably the ones that are feeling the squeeze of this inflation and the cost of living crisis a little bit more. The $20,000 small business instant asset write-off is going to be extended by another 12 months, so that will bring it to the end of 30th of June 2025. This allows small businesses to deduct the full cost of eligible assets if they are below $20,000. Or put in simple terms, if you buy an asset for your business which is up to the value of $20,000, then you can claim the full amount in one go without having to depreciate it over a depreciation schedule. Those assets which are over $20,000, they can be placed in the small business simplified depreciation pool, and you can write off 15% in the first year and 30% in the subsequent years. Here is one for all those people out there that have a student loan. The government has proposed to cap the indexation on the student loan to the lower of the consumer price index or the wage price index. At the moment, it's just the consumer price index. And the real kicker here is that this is going to be backdated to 1 June 2023. Last year, the consumer price index was 7.1%. So naturally, this increased student loans quite substantially, and people were pretty concerned about it. Under the new rules, it would only be 3.2%. So as an example, if you have $26,500 in student loans outstanding, Under these new rules, you're set to get a benefit or a payment into your student loan of $1,200 thanks to the backdating. The maximum rate of Commonwealth rent assistance is going to increase by 10% come the 20th of September 2024 to help alleviate some of the increase in cost of renting. For those of you who might not know, the Commonwealth rent assistance is a non-taxable rent supplement paid to those eligible people to help with the cost of putting a roof over your head. Under the pharmaceutical benefit scheme, we get necessary prescribed medicines without paying full price because they're subsidised by the government. In this year's budget, the government announced that there will be a 1-year freeze on the maximum co-payment for anyone that has a Medicare card and a 5-year freeze for anyone that has a pension or eligible concession card. This means that no pensioner or concession card holder will pay more than $7.70 for their medication plus any additional premium that's put on by the manufacturer for up to 5 years. There is also spending in the budget to create new Medicare urgent care clinics and also additional funding for free mental health services, which is amazing. Thankfully, there were no real changes in superannuation in this year's budget. And that is a relief because the government often tinkers with the super rule and it causes people to lose a bit of confidence in the system. From 1 July 2024, the concessional contribution cap limit will be increasing from its current $27,500 to $30,000, and the non-concessional contribution cap limit will be increasing from $110,000 to $120,000. Now, this is not part of the budget. This is just the standard indexation, which is kicking in next financial year. But that's a wrap on this year's budget summary. Obviously, I haven't covered everything in this video, just those things and those topics which I think are pertinent or could be important to your financial plan. If you do want to learn more about the budget, I'll leave a link in the description box below to the budget paper. Feel free to have a read through that. But otherwise, thank you for watching and I will see you guys in the next one.